What's up, traders? Matt from the Trade Brigade here with your weekend crypto report, where as always, I do a technical analysis and give you my thoughts on the coins listed up above. No major changes to our watch list this week, so we're going to dive right into the Bitcoin daily time frame. Just like in last week's episode, I would point out that it's no fun to be covering a red, bearish crypto market, but it must be done. That way we just understand roughly when the tides start to shift back to the bullish side. So that being said, you can clearly see the resistance trendline is still in play. We are well underneath it. So that's the first obvious target that may start to show signs that things will reverse. However, I would really start to focus much more on this horizontal area at $41,150-ish per coin. Why is that the number? Well, we know if we scrunch up the chart, remember block theory, there's block 1, here's block 2. Look at how significant that level is, right? All of this interaction in here, and even as support right here before breaking down, to me, if we can't recapture that, then it's very likely that we get yet again another lower high off that area and we continue the daily downtrend, even if we break the resistance trend line. So please, the horizontal area is really the one to be watching at $41,150 per coin. Just to sort of theorize about some scenarios here, wouldn't it be something if we get something that breaks it, forms a higher low off of it, and then we continue on our way? What type of pattern did I just draw in? Certainly an inverted head and shoulders. Now, I'm not saying that that will happen, but I'm sort of thinking out loud with you guys. Wouldn't that be something, right? So keep an eye out for it. I'm not saying that it will happen, but if it does start to unfold, you know what the drill is, right? We're looking for longs if that is the instance. So based on the little bit of a dead cat bounce that we're seeing here, it may actually be, something to watch out for. Many of our other coins are actually just kind of going sideways, giving us much more bearish consolidation instead of more of a bounce here. So Bitcoin, definitely keep an eye on it into the upcoming week, especially as the stock market tries to find a bit of a bottom. I'm not saying they're directly correlated, but they've been moving, that is the crypto market and the stock market, much more in sync recently as opposed to in the past. If we get a rejection here at the 37,000, let's call it 850, then we're looking for a full rollover, down to the low end of that block number 1 from in here, and just what roughly people would call $30,000 Bitcoin, right? 30K Bitcoin, that is the target if we reject here for a much lower high than the $41,150 mark. So that's what I've got for you here. Please do respect the trend. Don't try to get in early until we have some signs of confirmation. Let's move along and talk about Ethereum. This one is one of those instances where we're starting to get much more of a bear flag instead of a significant dead cat bounce, right? Really, this is sideways price acceptance instead of the buyers trying to stage a bit of a rally, even, failing to get up and over that 2686, right? You can see the prior significance of that level here. It was also prior resistance. You get the gist. It's just not quite as bullish, especially after such a major tumble from these higher levels above $3,000 per coin. The area where this one is going to change is much further overhead, right? Clearly, your resistance trend line, there's just much more distance until we get there, as opposed to something like your Bitcoin. So I'm seeing relative weakness right now inside of Ethereum. I probably wouldn't be overly optimistic for a longer term reversal until that starts breaking. It's not to say that you can't have a bullish trade here. If you can recapture 2686, maybe there's a move into it. However, I would start to reevaluate when we get there. If we start printing inverted hammers, basically indecision dojis, things that would make you question, okay, maybe the buyers are actually running out of steam. The downtrend's going to be sustained. That's not where you want to be initiating the new position. And you would probably bail on the little scalp you took from here to there, right? So that's what I'm seeing inside of Ethereum, a little bit more bearishness. If it's going to break down out of this as a bear flag, we know the flush is under 2310, and it should take us closer to 1774, coming from the equivalent of 30K Bitcoin, right? Big shelf of support around that area, and that's probably where I would cap it off into the upcoming week. Let's continue along and talk about Binance Coin. This one is a little bit better than Ethereum, but not as good as Bitcoin, clearly, still giving us that sort of bear flag activity. This is starting to look a little bit more promising than Ethereum, as I just mentioned, but even still, we have two resistance trend lines to be contending with, and there's not a clear area of horizontal recapture that would make this one as attractive as Bitcoin in my estimation. Sure, you could split the difference and call a level somewhere in here. I really don't want to do that, just simply because, to get into the resistance trend line, we would have to recapture that anyways. So to me, A lot of work needs to be done inside of Binance Coin. It's not quite as clean as Bitcoin, but maybe a little bit better than Ethereum. Even so, I would probably wait for some sort of higher low pattern before looking for a break up and into some of these prior resistances. The main area I would probably watch out for is roughly 500, right? We know that it was a big shelf of support, then resistance right here. So off of some kind of higher low, that may be the target to be watching for the upside. But again, nothing about the chart, at least as of right now, would indicate that higher is the move. It is sort of just nothing more than bear flag consolidation. You know, if we do roll over, the breakdown of 335 should get pretty nasty and take us to these major lows, again, equivalent of 30K Bitcoin, structurally speaking at least, down there at, let's call that 260 even roughly. Next up, we have Cardano, and this one is probably even more bearish. They just get more bearish as we go through the list, to be quite honest with you. So, you know, if you're not into bearish charts, then this is not the video for you. Regardless, big bear flag consolidation, getting no significant bounce off of that $1 whole psychological number, which I'm fairly surprised at, to be quite honest with you. I did think that the reaction would be a little bit stronger here. It just simply hasn't come. For me, the only way to get involved in this at this point in time would be, okay, we can consolidate in here, that's fine. Technically speaking, it's nothing more than bear flag consolidation. We would anticipate breakdowns. But if it wants to take this out at the 120 mark, then maybe there's some quick scalps into the resistance trend line. I wouldn't overstay your welcome, noting this, the power of the daily downtrend. But what would we have, right? If we do something like this, it would technically be a look below and fail. As we know, the target should be the top end of the range, but because of the power of the daily downtrend, that's why I sort of mentioned you're probably only looking best case scenario for your resistance trend line. To the downside, underneath $1, what do we have in Cardano? We don't have any levels mapped out. If it were to break into this upcoming week, the next target underneath is roughly 81 cents. So not really a great opportunity there, especially, you know, considering the percentage point that would be, right? $1 to 80 cents, 20% loss, kind of not the best trade, right? So please be careful if you are trying to fish for a bottom in Cardano right now. A lot of work to be done if this one is going to reverse its course. Next up, we have Solana, and again, they get worse as the list goes on here. I'm going to pop that back on auto. You can certainly see that we did break that major shelf of support. We discussed that the other day. It's not good, right? So there's a lot of room to fall. We fell all the way. We did come into that prior structure. We're getting a little bit of a bounce, but not much. Again, it's looking more like bearish consolidation, bear flag acceptance. So what we're going to do is just mark off the next structural area right here from the low end of that consolidation way back in August. And that's at $66, right? So a breakdown of 82, let's call it 83, takes you to 66. I mean, there's just no reason to be fishing for a bottom right now inside of Solana. If you have a dollar cost averaging strategy, again, there's nothing wrong with taking a small nibble on some of these lower prices, but this is not the time to be going like all in, fishing for a bottom, looking for a massive reversal back up to the resistance trend line. I mean, look at how far away it is in comparison to everything we've looked at so far. This one's probably the most bearish that we've had on our screens thus far. I can even draw on the secondary resistance trend line, and even that is significantly far overhead. So Solana, probably not the one to be looking for longs in this upcoming weekend or even week maybe. So wait for more of a pattern to hammer itself out, some sort of higher low. That way you can use a stop loss here, then look for maybe a break. I don't know how it's going to unfold, but I would need to see some more structure before I start getting bullish on a coin or a chart, really, that would look like this. Next up, we have Link. And again, it just keeps getting bearish. Big breakdown. It did not give us anything off of that 100% retracement off the break of the support trend line here. So honestly, it's just not attractive as the chart sits right now. And that's what this video is for. I mean, if you're tempted to go out there and buy stuff, just don't do it as of right now, because we're sitting right on a very critical area of support, right? This is basically the equivalent of 30K Bitcoin. And if that goes, where's the next major area of structure? It's way down here, close to $10.50. I mean, that's just not a trade you want to get wrapped up in, especially if you're trying to play it long down here. It would really require a break back up and over the low end of that area right there, 18 even. So boom, something like that. Wait for the higher low pullback. And then if we cross that high, that's your long entry, right? And then you're looking for these upside targets that we've had mapped out, 23.80 and then 29, roughly 30-ish up there. Again, very speculative in terms of these patterns that I'm drawing out. I'm just talking about if you start to see these things unfold, maybe there's an opportunity there, but as of right now, probably staying away inside of Link. Next up, Ripple. We know this one's bearish as well, breaking down out of the not multi-year, but really year-long symmetrical triangle it was in. Bearish acceptance down here at the lows, sitting right on a critical area of support. I would mention that, we do technically have a little bit of a last-ditch effort there around, what was that, 52 cents? Is that what that level is? Yeah, 52.24 is that number. And then if that breaks, that's where it's kind of sayonara, come all the way down to 37.70. So not really seeing any patterns here explicitly to point out that would indicate anything bullish. We can draw on a resistance trend line that would look fairly steep, something like this. We're pretty far away from it. If it's going to be a recapture of this horizontal area, it's got to be some sort of higher low and then a break to maybe, just maybe, reattempt this big area of inflection point there around 88.86. Okay, so that's all I'm seeing in Ripple. Does not look attractive, as has been the theme of today's video. Next up, we have Polkadot. Again, don't be surprised here. Bear flag acceptance, really not giving us a significant dead cat bounce. If it were, there's a very clear level on this one, right? This one's going to be very, very obvious. We have this horizontal level around 23.35. If we were to get there and break it, again, higher low off of it, that then accepts above, fantastic. Technically, I would start thinking about this as a look below and fail. It's a little bit deeper than what we'd traditionally like to see, but we'll just go with it for the sake of the potential for a trade here. Longs up and over the recapture, or even if you're more conservative, pull back higher low. There's your long entry up and over whatever high was set. Target technically should be the top end of the range. Again, because crypto's kind of in a downtrend, maybe don't push your luck, trail a stop loss up higher, and then lock in gains if it does decide to roll over on you. That way you're not getting burnt here. So Polkadot, I like it just because we have a clear area where we can get re-involved, but overall, bearish acceptance, right? If it does want to roll over and continue on its merry way to the downside, we have $12.78 as the last line of defense. Anything underneath that, kind of nasty here, down towards $7.50, honestly. And the reason I'm saying that level is because we have something like this, right? That's actually $7. Prior highs, and then the pullback before it really took off like a rocket. So can get kind of nasty here inside of Polkadot, one day at a time, one step at a time. No reason to be thinking long as of right now. Next up, we have Crypto.com coin, and this one is actually fairly interesting, staging a bit more of a rally off of these lows than everything we've seen so far. It's also breaking its resistance trend line. Remember what I mentioned about this coin also earlier on in some of the prior videos, right? Maybe because this is sort of a U for utility coin, if this starts to perk up, maybe it's a forward-looking indicator that says people are starting to get re-involved in crypto, and maybe it's just, again, very, very speculative here, maybe it's an indication that some of these other larger coins will start to bottom out. It's not a guarantee, it's just something I'm thinking about, so take it with a grain of salt. To me, if this continues, it's got to get more acceptance up and over this 41 cent mark, any higher lows off of it, just continue to build the case for potentially inverted head and shoulders, right? I mean, to me, that's really the pattern here in many of these coins that we're watching out for. And then the recapture of this horizontal 50 cent mark, fantastic here inside of Crypto.com coin. Again, very, very speculative. I want to hammer that point home. I'm just thinking out loud in terms of patterns that could potentially unfold. It needs to actually show itself before we get bullish in the crypto market. Again, just theorizing with you guys, showing you what's going on in my brain, how I'm thinking about charts. If it wants to roll over here, again, I wouldn't read into the break of the resistance trend line too much unless it forms a higher low and then reattempts in a short period of time. If it wants to come back down and make an equal low, doesn't matter that the resistance trend line was broken. We still have a lower high. We would look for a flush under these lows, probably coming to the ICO open down there around 25 cents. Next up, we have Matic, and these were the two relative strength coins. However, now they're certainly in the camp of just kind of neutral, right? We are catching ourselves for a bit of support at this horizontal area, but the support trend line has been broken, and we did get an upper wick on the daily off of it, so that does strike me as being a little bit more bearish than bullish. To me, there's really no trade to be had in this until we can put in some sort of higher low, confirm that maybe this is the start of a new uptrend, and then it's all about the back test of this area, close to $2 even. So if something like this happens, fine, there's a trade to be had there, but don't overstay your welcome as we come into this area. That's where, again, a trailing stop loss is going to be your best friend. That way you can lock in some gains and not get burnt if this does decide to roll over on you. Next up, we have almost the same exact thing on Luna. You can see that we're actually breaking down more aggressively. I suppose, just based on everything that we've seen so far, this is actually the most bearish chart of them all, breaking this horizontal area of support, coming from right around in here, breaking the support trend line, and we're actually on the move lower instead of getting that horizontal bearish price acceptance. So to me, this is probably not the one to be fishing for right around now. I mean, if the rest of the crypto market starts perking up, maybe there's a reasoning to say, okay, this one's the lagging one. Maybe it's going to catch back up. But to me, that's an extremely risky play. You should only do that if you're willing to lose whatever it is that you put into it. Now, I'm not saying that the coin goes to zero, but you may be taking a substantial loss if you try to get in here expecting the laggard to catch up, and it never does. That's all I'm saying. So supports underneath us are going to be this horizontal area here, close to 3760, we'll call it. And then anything after that, let's see what else we've got. That's got to be here, right? If I do something like that, you can clearly see prior highs, then support and support in there. Sure, there will be some intermediate stuff in there, but really 2330 is the next big one inside of Luna. And again, I'm not saying that we get there all over the course of a week. I'm just saying from a structural standpoint, that's what we've got for numbers to be paying attention to. That's really going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. I know it's very, very difficult and sort of disheartening to be covering a bearish crypto marketplace. However, it must be done, as I've mentioned earlier. Don't forget that our secondary channel, it is also linked down below in the description. 10 to 12 video ideas every single day, not week, every single day. And with all of that being said, I wish you a green trading week.